Hi everyone, it's AJ with North Capital Mortgage, and today I want to go over home loans for the self-employed. If you are a self-employed person and have previously applied for a home loan, whether it be a purchase or a refinance, it's likely that you've experienced some obstacles in regards to your income documentation. And that's because as a self-employed individual, you have the opportunity to use certain IRS strategies or tax deduction strategies, which ultimately makes your net income on your tax returns not necessarily coincide with what your true cash flow is. So there are a number of loans that are available to you that I'd like to go over with you today that allow for alternative income documentation, which can be very helpful for you. So before we get into that, if any of this resonates with you, please send a like for this video or follow the channel. It would greatly help. Some of the alternative loan options that we want to look at today, four in particular, are bank statement loans, profit and loss loans, 1099 loans, and asset depletion loans, which is quite unique. The first one is a bank statement loan. So when we talk about bank statement loans, we're really looking for what your cash flow is. These are cash flow driven loans. So we are not going to look at your traditional income documentation at all. So no pay stubs if you give yourself pay stubs, no tax returns. We want to look at 12 to 24 months of your bank statements. And what we're going to do is we're going to look at the business deposits from those bank statements, and we are going to divide that by 12 to get a monthly average. And then we're going to apply what's called an expense ratio or an expense factor. So that can be as low as 10%. And that's going to basically tell us what your expenses are to run your business. And we're going to make that assumption if you are an individual with a service-based business and it's just you, it's likely going to be 10 to 20% expense factor. If you have multiple employees and you're inventory heavy, it may be as much as 50% expense factor. And when we apply that, I'll give an example here. If we average $10,000 a month for your income, we have a 20% expense factor. That's going to give us $8,000. And that's literally what we're going to use for your monthly income. Okay. So pretty simple, pretty self-explanatory, but a great way to circumvent the concerns of excessive write-offs on your tax returns. The next one is going to be a profit and loss loan. So we have to get a CPA prepared profit and loss statement for you. And again, no tax returns on this, no pay stubs. That profit and loss statement, it's going to show your gross deposits. It's going to show your net income after your expenses. And so we're not going to utilize any type of expense ratio for this particular loan. We're going to utilize the net income divided by 12 months for that 12-month profit and loss statement. For example, if net income is $180,000 divided by 12, $15,000 of monthly income used. Okay. Again, no expense ratio on this one. Third loan is excellent for gig workers, for independent contractors. It's 1099 only. So if you are a gig worker and you're receiving multiple 1099s from multiple places, we can take all of those 1099s over the past year or two. You can use 1 or 2 years 1099s. You can even use year-to-date income if you believe that the year-to-date income will help boost your average. But for whatever period you give us that 1099 documentation, we will divide that by those number of months and utilize that for your income. 10% standard expense ratio on this one. If your services are inventory heavy and you use perhaps subcontractors, the underwriter may increase that a bit, that expense ratio, but standard across the board, we're going to start with 10%. So another great loan to circumvent maybe some cumbersome tax returns. Asset depletion loan. This is a very unique loan. Money talks because we're qualifying you on your assets alone. So what that means is, again, no tax returns, no pay stubs, no traditional income documentation. We're going to take your qualified assets and divide that by 60 months. Okay, so no employment even required. You could be out of a job or retired or whatever it is. So if you have qualified deposits of 500,000 or assets, I should say, we're going to divide that by 60 and give you $8,300 a month in income. Now, let me say this. If you're making a purchase and you're putting, let's say, $100,000 down, and after the loan closes, you're only going to have 400,000, we're going to use the 400,000 and divide it by 60. So this is the assets that remain after closing costs and fees, okay, and down payment as well. So, six reasons why. Why do these alternative loans work? Well, the first one is obvious: flexible income documentation. No tax returns. The underwriter is going to work with you and look at some alternatives because they know that uh, there are a lot of write offs available for those who are self employed. If we are okay to combine income. The second reason, if you have a wage earner job and you are a 1099 employee as well, we can utilize both of those incomes to help boost your qualifying uh, parameters. So higher loan amounts on these, you have roughly 800 some odd $1,000 for conventional standard. In certain areas around the country, you're going to have higher loan amounts available. You can go up to sometimes $4 million loan amounts on these alternative non-QM loans. Forgiving credit events, many time on a traditional jumbo, I've seen you have to wait as much as 7 years from a major credit event like forbearance or uh, bankruptcy, as little as 2 years for these types of loans. So much more forgiving credit event scenarios available. Higher debt to income ratio, again, easier to qualify. And you are really going to get a holistic underwriting style for these loans. We're going to look at the whole picture. We're not going to get hung up if you don't meet one particular requirement. Okay. So, again, if these loans sound like they can help you in some way, if you've had trouble qualifying as a self employed person with traditional income documentation, give me a call. Not only does it take someone who has access to these types of loans, but somebody who has experience, because it's really an art when you're structuring these loans and presenting them to an underwriter. Okay. If you have any questions at all, you can give me a call. You can send me an email. Happy to hear from you, and I appreciate your time. Thank you so much.